I think it was looking good, like you said, over the weekend, and then we got a dump, a decline, sorry. Maybe because the Bank of Japan looks hawkish. I don't think the Bitcoin high is in place. We were too optimistic about this happening by December, but I do think Bitcoin can make an all-time high by the end of January. I don't think we should think the highs are in place for Bitcoin or Ethereum or crypto.
As the price of Bitcoin recently dipped below the $86,000 mark again, Tom Lee just shared a massive update on the current state of the market. He will break down the reasons behind this drop we've seen today, and he has even updated his price prediction for Bitcoin and Ethereum through the end of January. He will also touch briefly on what's happening in the overall market. Let's dive in and hear what he has to say.
When we saw Bitcoin sell off and sort of the high flyer sell off on the notion that Powell got hawkish at that one, whatever it was, that one meeting, and then Williams totally turned that around, and the Fed futures jumped, and it became clear they're definitely cutting again, and we got very little for that. Bitcoin should be back at 100 if it really is totally dependent on Fed easing. And if it's the debasement trade, which people say it is, we didn't get much for now. Everybody, you're sure that they're going to cut now. There was a time where we thought they weren't going to cut. What do we get for going back to cutting mode?
Bitcoin and crypto have been disappointing because they really took it in the gut in mid-October and then kind of got hit again when, you're right, when the odds of a Fed cut dropped. Bitcoin fell, and then now that the odds have recovered of a cut, they haven't quite recovered. I mean, I think that that's still the lingering effects of that deleveraging that happened on October 10th. It's not that different than the wipeout that happened in 2022 with FTX. That took 8 weeks, so we're kind of emerging from that. That's 7 weeks in the rearview mirror, so maybe in another week or two, I think crypto has fully washed out, and that's when it starts to participate.
You'd be happy with 100 if it got back by the end of December, wouldn't you?
Yeah, in fact, I think it was looking good, like you said, over the weekend, and then we got a dump, a decline, sorry. Maybe because the Bank of Japan looks hawkish. Yeah. But I don't think the 4-year cycle, I don't think the Bitcoin high is in place. But you're right, we were too optimistic about this happening by December, but I do think Bitcoin can make an all-time high by the end of January. So I don't think we should think the highs are in place for Bitcoin or Ethereum or crypto. So a lot of it's going to depend on equities recovering, which we expect it to, and that helps the animal spirits. And I think a new Fed chair will help. And we have, as Becky said, when people got worried about a hawkish Fed, that kind of hurts the discount models. The discounted cash flow models like AI models, but it hurts crypto models too. So if we have a dovish Fed, that's really a tailwind.
Is there a point where a Fed that's too dovish scares the markets because they're worried about inflation?
Yes. The markets don't want the Fed to lose credibility. And the bond market will kind of protest if the Fed is too dovish. But I think when I look at Fed fund futures, especially implied inflation, the bond market's more dovish than the Fed. So it looks like the Fed is behind, and that's why I think cuts are necessary.
You had very aggressive targets for the S&P and Bitcoin by the end of the year. I mean, it'd be crazy to hit the Bitcoin target, for example. I don't know what that was. But 7,000 on the S&P is still something you think that can happen this year?
Yeah, I mean, 7,000 is only 2% for S&P. From here, I think 5% or maybe even 10% is possible in December. So I think a 7,200, 7,300 is likely for S&P. Well, I'm just looking at probabilities, but you're right. We've been wrong plenty of times, Joe, so I'm okay being wrong too.
You still bullish on crypto and stocks going into year end?
I am. I think the biggest tailwind that's going to emerge in the next couple of weeks is around the central bank. The Fed is set to cut in December, but also today is the day that quantitative tightening ends. And as you know, the Fed's been shrinking its balance sheet since April 2022. It's been a pretty big headwind for market liquidity. The last time we had an end to QT, quantitative tightening, was September 2019. And if you look back at that period, the markets really responded well. I think within 3 weeks rallied more than 17%. So I do think the timing of QT ending, which is now essentially QE starting, and the Fed, and at a time when November kind of was topsy-turvy, so I think people got cautious, but now have to performance chase, and then you have a really typically a seasonal tailwind. So I'm pretty bullish into December, even with maybe the first day being rocky.
Yep.
I mean, I'd say that the shutdown put a blackout on data, and I think that created a bit of anxiety because, markets like visibility. But to me, the fact that claims have been behaving and the September jobs report kind of showed a bit of a recovery. I think the labor market's probably holding fine, but the Fed doesn't want that to worsen. But I think the inflation story is actually weakened a lot. So to me, the Fed would be cutting for the right reasons, which is as they look at the next 12 months, the tariff inflation impacts are fading, but there's risk on the job market. So, I mean, I think it's cutting for the right reason, which is, real rates are tightening if they don't cut. I think there was a bit of soul searching, Becky, in November, because we know leverage rose. And we know there was deleveraging in some markets like crypto, and we know margin debt's high. And I think that there was essentially a reset in November because the market had a 6% decline, but the AI stocks and the meme names and a lot of other names fell even more. So I think that position reset has been healthy, and I think many fund managers we talked to in November, in the midst of all that, kind of threw in the towel, thought the rest of the year was sort of a write-off. And now if December is strong, there's going to be a bit of performance chasing. And I think that's what you should typically expect in the final weeks of the year.
The Bitcoin market is experiencing a downward slide today, with prices pulling back notably. This is part of a broader caution affecting the entire crypto space, following a recent period of strong performance. The main driver of this current negativity is macroeconomic uncertainty. Investors are closely watching for signals about upcoming interest rate decisions from central banks, particularly the U.S. Federal Reserve. If they signal a more aggressive stance to control inflation, it can cause riskier assets like Bitcoin to fall as traders favor safer investments. Additionally, some analysts point to thin trading conditions and a wave of liquidations, where automated selling is triggered by market moves, which has amplified the selling pressure. While some long-term investors are still buying on these dips, the immediate sentiment is one of caution and fear, not greed, as the market looks for a solid floor to stabilize. Wish someone taught you Bitcoin earlier? Now's your chance to do better for your kids or young family. This teen ebook is perfect. Link in the description.